Hi traders, it's Alberto. This is a continuation of the price action video series. This is lesson 3. Today we're going to talk about ABCD patterns, which is the patterns that Forex or any financial instrument usually moves when the markets are in an uptrend or a downtrend. They usually move in an ABCD pattern. And the Smart Trader platform will plot for me these A-B patterns so I can calculate where C is going to be, and then we target D. Okay, again, let me just briefly show you how that looks like. Here's an A. Let me just do this all over. I'll remove all the tools. And let's start up here. Notice that price went up here, then it came back down, then it retraced, and then that was D. So this ABCD pattern was complete. Now we have a new ABCD pattern. So A is up here, this is B, this is C, and the stop loss is above C, and we're targeting the extensions, which is D. And this is how usually the markets move in this pattern when they are trending. Okay, if they're consolidating like this, then it's a different strategy that we use when markets are consolidating. But right now, this is the Euro Australian dollar. So if I know this is A and this is B down here, then what I do is that I take my Fibonacci tool and draw it from the swing high to the swing low. And my entry is at C, which is a 61% retracement level, which is probably the most popular Fibonacci retracement level. It's also creating a bearish candle. So that's my entry, and my first target is the support down here, and then if it breaks the support, then it should go down to the extensions. So the final destination is anywhere from these 3 extensions. So if it hits an extension, then I'll reevaluate the markets and see if there's a trade to exit or stay in all the way down here. Okay, so I'm going to give you a few more examples of ABCD patterns and different currency pairs. Really exciting way to trade because this is how the markets move. Okay, this is pound dollar. Notice we had this is a 2-hour chart. So I'm going to make this smaller so you can see that we had ABCD patterns. Well, let's start over here because the market was in an uptrend and it turned around. Okay, so we had high highs, high lows, and if I take my Fibonacci tool, look how many ABCD patterns it generated. 1, 2, and 3 before it turned around. So let me remove that. And again, the market moves in an ABC pattern. It starts here. Oops, let me just remove that and start again. Swing low to swing high, then a pullback, and then D. Then A, B, C. So C becomes A. So that's the new A, and then B, and then a pullback, and then D. Okay? And then that was the end of the ABCD patterns in an uptrend because it turned around and went the opposite direction. Okay, so we had A, B, C, and down here was D. If we look at a higher time frame, it's actually easier to do this. This is a 4-hour chart. So if I took my Fibonacci tool, draw it from the swing high to the swing low, notice that it retraced all the way up to 78%, and it came down, and that was the target right there, the extension, the first extension. Then that would have been the exit because there was a bullish engulfing candle, and now we're going in the opposite direction on pound dollar. So we have higher high now. This is a lower high, lower high. Now we have a higher high. So it's reversed. So instead of doing A, B, C, D pattern to the downside, we look for A, B, C, D patterns to the upside. So this is A, this is B. We need a pullback, and then D is up here. So I'm going to take my Fibonacci tool and draw it from the swing low to the swing high. There's a pullback to 38% retracement level, so that may work. So if I buy the pound dollar, I would have to put my stop loss below that Fibonacci 38%, and I'm targeting the extensions up here. Now we have a trend line at the 127 extension, so that probably would be a target right there. Let's look at some other pairs. Let's look at pairs that are actually happening right now. Okay, so this is the pound dollar. I took a trade on this pair. So again, bullish engulfing candle. Okay, alerters to this downtrend is over, so we're taking advantage, we're utilizing our candlestick pattern recognition, understanding what a bullish engulfing candle is. So now I have an A and a B, and this is the C right there, and then my D is up here somewhere. So I'll take my Fibonacci tool and draw it from the swing low to the swing high. There's the pullback down here. That's my entry, and I'm targeting the extensions. Okay, so now the stop loss is always below, like in this example, my stop loss would be below this candle. Okay, so I'm waiting for this candle. Actually, once that candle closes and starts, let's see what the 2-hour chart is telling us. 2-hour chart is turning green, but there's a little bit of resistance. So I took this trade. My stop loss is below the support. Notice that it also happens to be a previous resistance level. So resistance becomes support. Okay, and if it holds, then we should see market go all the way up here. Okay, so that's that trade. This is pound Swiss, and pound Swiss has been in a clear uptrend. And again, high highs, high lows. We take a trade when the markets pull back. So in this example, we take our Fibonacci tool. We've got, well, let me just first show you, we have an A, we have a B, and then we have a C, and then D is up there. So take my Fibonacci tool and draw it from swing low to the swing high. There's my pullback. That's my entry. My stop loss is below here, and my target is all the way up here at the extensions. Okay. And let me just show, there's another trade set up on, here is Aussie yen, which I just took a trade on this pair. Okay. So again, we're in an uptrend, right? We have higher highs, higher lows, and the first trade was down here. We had A, B, C, right? It pulled back, and D. So it completed its first A, B, C, D pattern. Now let's look and see what D was, what extension D was. So swing low to swing high, right? And it target the first or the second extension, and that was the target. Now that's complete. That A, B, C, D pattern is complete. So now we have a new A and a B, and now we have a C, and then D is up here somewhere. So I'll take my Fibonacci tool and draw it from the swing low to the swing high, right? And it pulls back to 78% retracement level. And if it comes back to that level, then my extensions are my targets right up here. All the way up here at 81.65 is the first extension. So that's my target. Okay. So that completes the tutorial on ABCD patterns. Very powerful way to trade because your entries are exact or specific. Your stop loss is a minimum, and your targets are very predictable.